Well, the market also likes certainty, so investors are watching politics very closely as we enter the home stretch of the presidential race. According to Nielsen, more than 66 million Americans watched the debate last night. Mike Santoli tells us how Wall Street views the race for the White House right now.
The markets have not quite called the election for Hillary Clinton, but Wall Street has grown more confident in recent days that the odds have moved in her favor. The relationship between financial markets and election outcomes is indirect and hard to prove. But on balance, stocks have generally been stronger when Clinton's odds of victory are rising. This pattern held following a tumultuous weekend in which Donald Trump lost the support of dozens of Republican officials after a tape of his lewd comments about women in 2005 was released. Stock futures climbed modestly as soon as they opened Sunday evening and continued higher on Monday, as electronic betting markets to take wagers on the election had Clinton's odds of winning rising toward 80%. Mexico's currency, meantime, climbed by 2% against the U.S. dollar on Monday. The peso has become a key barometer of Trump's position in the race on the assumption that his trade and immigration policies would hurt the Mexican economy if he were elected. Wall Street policy analysts say investors don't necessarily have an outright political tilt toward Clinton, but that markets prefer the more predictable status quo candidate. Yet markets also tend to do better under divided government, with control of the White House and Congress split between the parties. Clinton's latest surge in the polls has placed Republican control in the Senate in jeopardy and even sparked some talk that the House could shift to Democrats. While Republican sway over the House seems reasonably secure, a Democratic sweep could make investors anxious about what that could mean for regulation of several industries. Shares of drug companies, banks, and oil companies could come under pressure in such a scenario. And investors might also brace for an upper income tax increase that could lead them to sell stocks to realize gains in the current tax year. Still, many experts are reluctant to declare Clinton a sure winner. For one thing, this race has been volatile, with significant swings in the national polls from week to week. For another, betting markets were dead wrong on the Brexit vote in the UK back in June. Markets were blindsided by the vote to leave the EU, and investors are wary of another populist shock, which means Wall Street has 4 more weeks of uncertainty before it can fully price in the next 4 years of U.S. leadership. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.